7:22 is our time here on the Morning Brew on this Thursday, April 8th. And as we have been promising all morning, we do have the NGC Chairman on with us, Conrad Enill. Good morning, sir, and welcome, and thanks for joining us this morning.
Good morning, and thank you for inviting me.
I want to tap into your experience as a former Minister of Energy very quickly and get a comment from you on the explosion that happened in NiQuan yesterday. Your thoughts?
Well, the very first thing that you learn when you get into the energy business, either at the level of minister or at the level of an employee, is that safety is the most important thing in the sector. And therefore, in many instances, organizations build into their operations what we refer to as a safety culture, and they manage the organization on the basis of safety being the #1 priority. In the NGC group, for example, every meeting, both at the level of the board and at the level of the management, begins with a safety moment. And what that is intended to do is to focus everybody in the organization on the need to remember that safety is the #1 priority. And the reason for that is because incidents like the one you saw yesterday will occur. Despite the best plans in the world. You're talking about assets, you're talking about high pressure volumes, you're talking about things that are operating in such a way that if connection is loose and the pressure goes through that, it can blow it up. So in the sector, while there's a recognition of that these things occur, you basically make sure that your organization focuses on two things. One is safety, yes, but the other one is also asset integrity. So you make sure that your assets are always operational and always at the highest level of efficiency, quality, and so on, and you create a safety culture. It is one of those reasons why, for example, in the energy sector, you saw over the last couple of years things like stove safe to work, where organizations had to deliberately get involved in making sure that the organizations work. At the level of the government, the level of the ministry, they put in place very extensive safety requirements before you can open plants or before you can run operations. That is why in one of the instances as well, you simply cannot pick up people from anywhere and put them into the sector. You have to take them, you have to train them appropriately with the standards. You have to teach them how to deal with incidents as and when they occur, all with the intention of reducing the exposure to death, which is the outcome if you don't get it right. So safety is a big thing in the sector.
I want to move very quickly to the fact that TTNGL appears to have weathered the storm over the past year. It's reporting a profit for 2020.
TTNGL, I think, is one of those companies that signal to Trinidad and Tobago some movements that are taking place positively or negatively in the energy sector. In the case of TTNGL, that company gets its profits, if you will, from the operations of the Phoenix Park operations. And what we've been able to do with Phoenix Park operations, in spite of the challenges, is a couple of things. One, we've been able to ensure that, notwithstanding the fact that there is less gas coming through the system, that the quality of the gas that allows us to take out the product, that which we sell in the international market, was increased. We did that successfully. The other thing that we did is that we entered into purchasing a company in the U.S. that produces or that markets goods into Mexico. And we are able as well to see that, notwithstanding the pandemic, that the need for the product has stayed, and in fact it is holding and it is increasing. As a result of that, we've seen prices doing a little bit on the uptick. So 2020 was a difficult year. In the last quarter, we started to see some positive changes, and it has continued into this year. And I think that 2021 is hopefully to be a better year than 2020. And yes, we did make a small profit in 2020.
The thing is, though, this piece of good news is coming against the backdrop of some not so good news, where we've seen several plants on the Point Lisas Industrial Estate shut down. The most recent one being Proman, because they're not able to get enough natural gas. I'm sure that's kept you up at night for a couple nights when that announcement came out.
Well, no, it didn't, because the issue is not getting the gas. There is sufficient gas available for all the plants that we have in operation. That's not the issue. The issue is the NGC, as a commercial entity, has to sell its gas that it produces at least a break-even cost or a small margin, so that it can continue to do the things that it normally has. So the issue is that gas, there is sufficient gas to keep all the plants running. And quite frankly, there has been some misinformation around the amount of plants that are not working.
So it's not a total of 7 that would have closed down over a period of 2 years or so?
There are plants that would have closed down because they simply cannot exist. It has absolutely nothing to do with any other consideration. You take the Yara plant, for example. That plant was a decision based on market conditions. It could not compete. Methanol, M1, those plants have come up for reasons other than the supply of gas or the price of gas. In the case of the MHTL activity, what happened is that the company had a contract with the NGC for a month-to-month. Our business does not allow us to do that indefinitely. We have been in negotiations for over a year now, and the problem has been the price point. You have to determine what the future prices are going to be, and you have to set your price on the basis of assumptions. What is happening is that the companies are meeting, and I think they will start that again, to try and determine what are the assumptions for both entities. Because the NGC's mandate is to keep the petrochemical sector alive and well, because we understand that unless we do that, our business is affected. What the NGC will not and cannot do is to basically provide a price for which the people of Trinidad and Tobago will have to subsidize companies. That's really not something that we can do at this point in time, given the whole economic situation and given the fact that the organization of itself is suffering losses as a result of its own challenges in the marketplace. So the issue with the last plant is that the contract that we had with them was to be ended contractually so, and we were not able to put in place a contract so that at this point in time, the plants are offline. Immediately, as soon as the contract is available, there is gas available, and the plant will resume its operations. And we expect that, we will begin those conversations again and come to some agreement. I think what is important to note is that both the upstreamers, where we get the gas, where we purchase the gas ourselves, midstreamers, distributors, and the petrochemical sector, will have to negotiate certainly in the near term, lower margins than we would have gotten in the past. We've seen that in our business because the prices, although they are coming up, we are not sure how long they will stay at the levels that we are seeing, because for the very first time since 2015, we are seeing price hikes that tell us that the market is changing, but we don't know the impact of COVID-19. That this has been one of those issues that we're trying to manage, and therefore.
Mr. Chairman, notwithstanding, yes, that little bit of hope on the horizon, though, analysts have said over and over again that we have a challenge of not being a low-cost producer, which always comes back to bite us. I need you to respond to that.
The facts are the facts. The low-cost producer was one element of our success. We've gone past that now, and it is not unique to Trinidad and Tobago. When I was in government many, many years ago, the CEO of BP said to me that one of the challenges that we had going forward is that there is sufficient oil and gas resources for the next 100 years. However, the challenge is going to be how you make it commercial, and to so do, there has to be a different kind of conversation between the governments and the companies. And we see that happening now, where the governments and the companies have to sit down and work through fiscal incentives that make it commercial. The challenge that we face today in Trinidad and Tobago, based on what the analysts are saying, can be solved if we work out the fiscal incentives. And I think that there is conversations in the government now around those issues. There are conversations around Trade One, there are conversations around Atlantic restructuring, there are conversations around new resources, there are conversations around bringing new players into the field, there are conversations around what do you do with third-party gas. So there are lots of conversations that are taking place, appropriately so, to deal with what the analysts have identified, correctly so, as an issue. That's, as far as I'm concerned, not a good challenge. The market allows us, even on the basis of our cost of production, to be able to make a decent return. Because if you look at our quantities in the context of the global quantity, we're really less than 1%. So you can't see that in that consideration, you will not find markets. Yes, you have to do some work. Even when I was in another job, there were companies that were coming to us, or countries that were coming to us and say, look, we are prepared to pay whatever price you have because we think that we can get from you stability, we can get security of supply, and that is something that is important to our industry. So yes, while that is a statement of fact that we do not have low-cost gas anymore because we are now going into deep sea, it doesn't mean that there isn't a market that is available to Trinidad and Tobago. In fact, we've seen it in our history, where Henry Hub gas prices in the United States were $2 and $3 net back at the wellhead. We were able to get $12 in Japan. That's the nature of the business. So I think that while the analysts are talking about this issue of low-cost gas, I think we should be concerned about which countries do we partner with so that our gas product goes into their market. And we're doing some of that. Countries like Ghana, some of those African countries, they need the product.
I want to find out from you, now that we have this opportunity to sort of reset our energy sector and to lay a new foundation for the new world that we've entered into, of course, drawing on experience from the past, are we going to take a page out of the U.S.'s book and move aggressively to develop ourselves into a swing producer?
Well, because of our location, we have been called that in a lot of instances. But I think more fundamentally, Jesse, here is where the challenge in the conversation is. The challenge in the conversation has been around this notion of green, 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 green. We got to get into the green, we got to get. And that conversation needs to be balanced by timing, 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 timing. If we look at what the global statistics are saying to us, it is saying to us that the industry in which we operate, that's the gas industry, basically is not going to move insofar as its demand is required until around 2060. And when you look at the long-term horizon, you see that the green agenda, renewables and so on, the demand for it moves by about 15% over that period of time, while oil and gas move by about 5%. What it means, therefore, is that while there is an opportunity for us to transition, there is still significant value in the infrastructure that the Trinidad and Tobago system has. And therefore, what we need to do is to make sure that that system is efficient, that system is working, while at the same time positioning us to benefit so that when the economies of scale and scope are present, insofar as the green agenda is concerned, we would be there with the best of them. And that is exactly what we're doing. But to create a narrative that says, there's not going to be any gas, there's not going to be any oil, is not true. The quality of lives of individuals, as we speak, are currently based on those commodities. And the issue for commerciality is whether or not a business can make a profit by getting involved in that. If it can, then people will go into it. Some of the challenges we face is the cost of electricity, because renewables is higher cost now than electricity. So I think we have to work through those processes. We have to make sure the population understands the challenges. If you want green, it's going to cost us a little bit more in the medium to long term. In the short term, we have to deal with the current challenges, which is to make sure that what we have, we can do it profitably. We can make some margin, albeit not as it was before, but we are still in that game, and we're still in the business of producing oil and gas for the rest of the world.
I can't let you go without finding out the status of natural gas contracts. We would have seen a situation developing with Proman. How many contracts are about to expire by 2022 still?
Most of our contracts, we have worked through them. Insofar as contracts that to expire, let's see. We are working through the one right now with MHTL. I think we've done Shenzhen. Currently, most of the contracts that we have are, in fact, operational.
So they're good for another few years, you would say?
No, they're not good for another few years.
So you're in talks to renew them as we speak?
All the contracts for 2020, 2021 were concluded before 2020. During the course of this year, we have to enter into a new round of negotiations. But as we speak at this time, we are in the process of dealing with that whole agenda. The contracts that we have, I think it's somewhere. Let me put it this way: there are no contracts at this point in time that cause us concern insofar as quantities. Insofar as gas supply is the issue. The issue that we have been struggling with is whether the companies, on the basis of their price, their future pricing, and their economics, whether they want us to get into arrangements with them. And what we've seen is that they have been asking us, when their contracts end, to extend for 1 month, to extend for 1 month, until such time that they get some kind of certainty around what the future is. And just to make the point, we've seen over a 60-day period, the price for ammonia and methanol change at such a rate that it is making the price, the long-term competitiveness of organizations a little bit difficult to manage. So companies are, by definition, very cautious at this point in time, because if you get it wrong, you are going to make losses for the duration of the contract that you've signed with the NGC. So for us, the numbers are not important. What is important is the principle. And the principle is, how do we create an environment, how do we create a number of contracts that meet the individual company's requirement, but allows us to run a business without losing money, and at the same time ensuring that the petrochemical sector stays so that it can compete, because we believe that this too shall pass, and we believe that it is only a matter of time before we get back to the situation where this issue is behind us and we can be focusing on the future issues around creating more opportunities, creating more revenue, creating a more global type intervention.
Mr. Chairman, thank you so much for giving us time this morning. It's been a pleasure, and we'll chat with you again soon. We're going to keep our eye on developments with NGC and the energy sector. You have a great day, sir. Thank you so much.
Jesse, thank you so very much.
That was Conrad Enill, current chairman of NGC and a former energy minister himself, chatting with us on The Morning Brew. We've got to take a break. When we come back, we're going to give you a sneak peek of today's Business Guardian in the Trinidad and Tobago Guardian.